Welcome back to Money Talk. I'm Kim Parley. I'm here with Phil Davis from Philstockworld.com. We've been talking about artificial intelligence and the opportunities. And just a bit of context for you. We just talked about a play that Phil had with Qualcomm. Again, do your own research. Got to make sure that the risks are appropriate for you. But just, Phil, I want to give people a bit of context. For those who follow the Money Talk Philstockworld portfolio, here's a little update for you. Last time on the show, November 30th, Money Talk portfolio stood at around 288,859,000, up 189% in 3 years. Yesterday, and again, if you're watching this in repeat, it is February 28th. So as of, say, the end of February, it closed at 310,970, up 22,000 and change, I'll say, for the quarter. So, Phil, that's not bad. Not bad, my friend.
No, and it wasn't even a good quarter.
But we'll get into your second AI play in just a second, but anything you want to tell us just about the portfolio, just market conditions in general, just your thoughts on what you're seeing?
I'm not very enthusiastic about the market. I think we're going to have a 10% down cycle in the very near future, probably over the next few months. I looked very carefully at the stocks that we have, though, and they're pretty conservative positions, and they're very strong stocks, so I'm not too worried.
Okay.
Not worried enough to hedge, I'll tell you that much.
Yeah, well, that's interesting. And I guess, you know, and if you're right and the 10% happens, could be some opportunities at that end. Timing is tough, though. Like, you follow it every day.
We have a lot of cash.
Yeah, are you?
Yeah, the portfolio is, 80% cash, so I'm, really love it. I love a pullback.
Yeah, yeah. All right, well, let's talk about one that you see right now, and you teased us earlier. You said you like IBM, so let's talk a bit about IBM. I want to bring up the stock chart before we bring up the play, so people can just see where it is right now in terms of the current price. We can see it now trading at where are we right now? 128.19. So whatever. We'll say up just almost 5% on the year. Quite a volatile chart with everything else. But what's your play?
Well, IBM was our trade of the year last year, and we cashed it out successful. Everything was great. We got out. It's come back down a bit, and it's now roughly 128, I think. So we obviously like him. Again, we always like IBM. And I'm willing to put my foot down here at the 130 line. So we're more aggressive with the put sale on IBM, and we're going to sell the 130 puts for $14.70. That's going to bring in $17,000 for us promising to buy IBM at essentially the price it's at now. Then we're going to buy 15 of the 120, 135 spreads. Now, the 120s are already nicely in the money, and the 135s are not that far of a target. So it's, again, $22,500 spread that we're only spending $31.50 in cash on. So as long as you're willing to take the chance of owning IBM at 130, this is a phenomenal play because you can make $19,350 at $130.
Yeah. Can I ask you, you structure your plays as kind of, so if you end up owning the stock, you're good with that, right? Like, that's something you like in the longer term.
Very important. You never should sell short puts on a stock you don't want to own.
Right. But let me ask you, just to play devil's advocate, what's the bear case on IBM?
The bear case in IBM has been for ages and still is that they are not innovative enough, that they're not moving fast enough, and that they're going to get leapfrogged by these NVIDIAs and people like that who are just going off in a completely different direction. Whereas, IBM is still the research company they've been for the last 50 years, and they are always looking to where they can improve things over the next 20 years rather than worrying about what's going to be hot next month or next year or 2 years from now. It doesn't concern them. As you know, they did the Watson thing years ago. That was AI. They played with it for a while, and they kind of lost interest, frankly, because they see something further afield. It's going to be a better system, more quantum computing is what they're shooting for now. And they think AI is going to be almost a toy compared to what they're developing.
Wow. The quantum computing is a whole different conversation. I'm fascinated with it too, but we're not going to do that today, Phil. We'll dedicate some other time to that.
Well, that's another thing. When it really comes out, that's, first of all, encryption is out the window.
Yeah.
Once you have quantum computing, all your encryption is useless. So you're talking about very fast changes coming.
Yeah. Yeah, and then when you pair it with the AI that's already there too, there's a whole world.
Yeah.
Let me ask you before I let you go too. Like you mentioned that you could see another 10% downturn in the markets, but when you look out, 2 years, 3 years, 5 years, there's so many things going on right now. I think it's truly confusing for people because you have, basically the disintegration of, someone could say, the economic world order. You've got, the hiving off of terms of, maybe Russia in terms of what's happening there, and China, what's happening there, and more nearshoring. You've got, changing politics, demographics coming down. Then you've got great things like AI, which I would think is ultimately quite disinflationary when you kind of put it all in there. But how do you see the markets over the longer term? Or do you even think about it that way?
No, I do. I mean, look, there's good and bad to these things. Like, my father was an actuary in the 60s when I was born. So my father was an actuary. The kind of, they used to have rooms of like 100 people in accounting firms. And in any business, in fact, one floor of any business would be these people sitting with these adding machines going like this all day, like putting numbers in and putting like that and doing columns. And fortunately for my dad, when computers came along, they gave him a manual and said, hey, figure this thing out. And he turned out to be good at it, and he went into computers. But those actuaries, those millions and millions of people who did that job all over the world were gone in 5 or 6 years after that. Yeah. Once the computers started adding the numbers, they were useless. They all went on to get other jobs. They found other things to do. There's more stuff. It's the dislocation, though, that can be very painful. But that doesn't mean it's painful for the companies. You have to look at it from the company perspective. This is going to be a productivity boom like we had back in the 90s, where the internet just sort of changed everything and was the birthplace of all these incredible companies that grew up around us, the ones we have today. Google, Apple, Microsoft, all that. It became possible because of the pain that we went through in the early stages. Yeah. But from a company standpoint, if you pick the right companies, holy cow.
We're going to have to leave it there, Phil. Fascinating perspective. Good to see you. Come join us again soon, okay?
Thanks, Kim. Yes. Thanks. Very nice having you. Thanks a lot.
Phil Davis from Philstockworld.com. That is it for our show. Reminder, want to get in touch with us? Send us an email to moneytalk@td.com. And don't forget Money Talk Live, which airs weekdays at noon on TD's web broker platform, hosted by Greg Bennell. Thanks so much for watching. We hope to see you again next week.
The preceding paid commercial program was brought to you by TD Wealth.